You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to the Options Playbook, the program where we break down cutting-edge option strategies and explain how you can incorporate them into your own portfolio. Whether you're looking to grow your capital with some offensive maneuvers or protect your investments with defensive plays, you can find them all in the Options Playbook. The Options Playbook is brought to you by Ally Invest. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to ally.com/invest/disclosures to review additional risks involved with trading options. Securities offered through Ally Invest Securities LLC, member FINRA and SIPC. Now, let's open the playbook and get started.
Welcome to Options Playbook Radio. I'm your host, Brian Overby, Ally Invest Senior Options Analyst and author of the Options Playbook. Happy New Year, everyone. Welcome to 2022. That's a mouthful overall. Very happy to be in the new year. Had solid markets coming into the new year. I guess people still do believe in the Santa Claus rally. Normally, the Santa Claus rally runs from about mid-December to the second trade day in the new year. And guess what? That's what today is. It is January 4th. It is a Tuesday. The market's closed. Overall, the Santa Claus rally over the years has averaged about a 1.4% return in the S&P 500 indexes, or the major indexes overall. We are actually higher than that. Based off of the close today, we're going to be about 1.5% approximately. We closed kind of flat on the day overall, but a little bit higher than what the average has been. So it's always great news to know that people still believe in the Santa Claus rally. With that said, I am still traveling from the holidays, haven't quite made it back to my home office at this point in time. So I put together a little show today just to talk about some of the top episodes. Last week, one of the top episodes was actually replayed just because I was on the road doing a little bit of traveling, and that was the remastering of the 100th episode of Options Playbook Radio. And I have to give you a shout out. You out there, the listeners, are making this program what it is. In 2021, we had over 1.7 million streams or downloads across all the different venues here on Options Insider Radio of Options Playbook Radio, or what the cool kids call OPR. So this week, I'm just going to highlight, we're going to be short and sweet, and I want to talk about some of the most popular by demand videos, or I should say podcasts that I did in 2021. And the number one, I'm a little bit surprised on, only because it just shows how astute the listeners are here on Options Insider Radio, and that back on 127, so we're going all the way back to the beginning of the year in 2021, and the hot stocks and the hot topics were all the meme stocks. In particular, GameStop was one of them that was actually announced in the title, and just the ton of volatility that the meme stocks were receiving at that point in time. And that episode was episode number 349. And it says, forget the meme stocks. Let's talk about a skip strike in Google. And part of the concept of it was we have enough volatility in the marketplace as it is. We don't necessarily need to go searching for volatility. At that point in time, the VIX was elevated overall. And if you're looking to do an advanced strategy, if you have higher volatility, a lot of the underlying stocks that have high prices don't need any more volatility, right? The goal of a skip strike butterfly is to be able to put the trade together, get a decent net credit to your account for putting on a butterfly overall. We get so many questions when we do the listener shows. So if you ever want to learn a little bit more about my thoughts on skip strike butterflies, you just want to search for the huddle ups that myself and Mark Longo have done in the past, because we do, it seems to get a lot of interest. And it's part of the reason why this was one of the most popular shows overall. But we were looking at Google, and you have a high price stock. You have a volatile marketplace. Some people can think about doing short put spreads, short call spreads, and a skip strike butterfly is a great alternative to those short time decay, those short theta trades where you want the time decay, but it adds a lot of risk when you have a volatile marketplace. So because of that, when you do a skip strike butterfly, a lot of people, I want you to think of it this way, in that when we skip that strike, a lot of people call it a modified butterfly. Inside my book, the Options Playbook, I call it a skip strike butterfly, because we're literally skipping a strike. We're adding a short spread into the butterfly, a little bit of an advanced concept, and hopefully bringing in enough credit to pay for the actual butterfly overall. Now, this is easier to do when volatilities are high. And so in Google, there was no major event that was going on January 27th, but markets were high. You have a high price stock. So let's look at a skip strike butterfly. That trade actually worked out. So guess what the number 2 highest watched show on OPR was in 2021? It was episode 350, the very next one, where we did a rinse and repeat on Google. And the concept was, if volatility stay high and the trade works out, just stick with it until it doesn't, and then manage your risk and move on to a different trade. So since the marketplace was basically the same, and in episode 349, the trade worked out. Now, I always got to emphasize that we're just trying to learn here on Options Playbook Radio. Nothing is ever meant to be a recommendation. I want you to take your forecast, your stocks, and try to apply some of the strategies inside the Options Playbook. There are over 40 different strategies overall, and the whole goal of our podcast here is to look at situations where different option strategies might apply. And this appeared to be a good time to be doing this in a high price stock like Google. You could have looked at Amazon. Those higher price stocks, just the fact that they are higher priced brings in premium. You have a high volatile environment that also creates premium in the option prices. So we looked at, on episode 349, a skip strike in Google. That one worked out. So we looked at another one on 350. And the goal to that podcast was really that, well, if it works, keep going. Figure out where your pain point is. And if volatilities come back down, if the market conditions aren't the same, well, then, maybe stop the strategy and look for something else. All right. Then we had the third most popular episode. This one was recorded on July 14th. And that one was, is there a time for time spreads? And we looked at a time spread in Disney. And based off of that strategy, I think one of the reasons why that is so popular is that Time spreads always intrigue option traders, but they're very hard to understand. And my goal of doing a time spread is not necessarily that I'm chasing volatility skew overall, right? What I want is a condition, usually around earnings, where I'm buying a back month option contract that I think will increase in implied volatility and selling a front month contract that I think will decrease in implied volatility. So a time spread to me is just as much a forecast on volatility as it is on a direction or no direction. Maybe you could be neutral on the marketplace. Time spreads, if I'm bearish, I'm going to do it with puts. If I'm bullish, I'm going to do it with calls. If I'm neutral, it doesn't matter what type of option or what flavor of option contract that I want to do. But I always want to try to get the volatility on my side. So there's one time where 99% of the time, the implied volatility is going to increase as expiration approaches. And that one known event in the financial world is earnings. So when I'm searching for time spreads, I like to I'd like to go about 30 days out and look at, well, this stock is going to be announcing earnings. Let's buy the expiration that expires after the earnings announcement and sell the expiration that expires before that. Now, I might want to pick a direction or whatever. My whole goal of this trade is to be out of it before earnings. If I'm a little bit bullish on the marketplace, I will use call options, go a little bit out of the money, kind of target a price that way. If I'm a little bit bearish on the marketplace, well, then I'm going to lean to the downside, use out of the money puts. And that's how I'm going to set up my time spread. I'm usually not looking for a big move, but I do like to pick a direction when I'm looking at time spreads. So that was episode number 373. There is a time for time spreads. And then actually, and I'm really happy to see this because I really enjoy my huddle ups with Mark Longo. But the fourth most popular event was OPR 352. This was done on February 17th of 2021. And that huddle up, we talked about the fig leaf strategy, which is a very popular strategy inside the options playbook, and a little bit about the VIX and about the SPY. So we still had elevated VIX at that point in time. So we like to address VIX options. They're one of the hardest things to trade. There's a lot of mysteries behind trading options in the VIX index. And we had a real good discussion on that. And that actually is the fourth most popular OPR. So that, based off of that information, I just thought if you were going to go back and wanted to do a little bit of listening, I thought I'd highlight a couple of them. And I have my favorite picks, and mine kind of go along with a little bit more basic option strategies. Overall, when I think about options, I will talk about advanced strategies, especially on OPR, because like I said, we're trying to figure out what conditions of the marketplace fit that strategy. I never think that there's a golden book of answers for that, like what strategy you should do every single time. You find it underlying, you decide what option strategy really fits in that. And I think a good one and a great example of that was episode 358. That was done on March 31st, and we were looking at a cash secured put in Ford. We had a little bit of volatility in the marketplace once again, so we wanted to take advantage of it. And we didn't really mind buying Ford if it went down a little bit. I think Ford at that point in time was trading around $11 or $12, and the stock did come down. And there was an opportunity to put that stock at that expiration date and actually buy 100 shares of it overall. So that concept and the concept of cash secured put selling is very popular in Ally Invest in retirement accounts. You're targeting a price below the marketplace, saying that if it comes down to that level, I would be willing to buy, if we do one contract, 100 shares of that underlying stock. And this is one way that you could take a position There was a little bit of news out on Ford at that point in time, but Ford had been very stale as far as the stock was concerned. It seemed to be stuck right around the $10 or $11 mark overall for a real long time. And obviously, Ford today, they actually, as of today, a lot of the car companies had done well, even though sales were kind of tough in this year. They announced sales today, and we saw Toyota and GM and Ford all do well overall in the marketplace, even though they've had supply issues. They just can't make the cars because of the chip situation, the semiconductors overall. So thought that one was a real interesting one on 358. And I'm going to stick with the more basic trades too. If we go back to June 30th, one thing that we did talk about was a FOMO trade. And there's you'll see a few titles that say FOMO, a little fear of missing out. And once again, a very popular strategy that we don't always talk about because it's fairly basic here. But we looked at buying in the money call option on XLF. And that was a fear of missing out trade. Worried about interest rates, think they could go higher. Let's look at the financials. They would benefit from higher interest rates overall. Let's use options to limit our risk, not necessarily buy the underlying outright where you have, in theory, unlimited risk all the way down to zero if you buy that underlying ETF. And let's just buy an option contract in it. And if I'm doing that, I'm looking at longer term options, I always want to look at very liquid underlines. And the XLF is just that. So once again, if I'm thinking about the XLF, the conditions on that underlying say maybe I want to consider buying either out of the money calls, in the money calls, on an underlying that has a very liquid marketplace. And the reason why I emphasize that liquidity is that if you go further out in time, you go a little bit deeper in the money, one of the battles of buying options as a substitute for the stock or a surrogate for the stock is that the markets are not as liquid. They're not as tight. The width between the bid-ask spread can be an issue. So a lot of people are saying, well, I would like to buy this option contract, rent it, have limited and known risk. I'm thinking if I was going to buy 100 shares of stock, I would buy one option contract. Or if I was going to buy 500 shares of stock, I would buy 5 option contracts. It puts my toe in the water. I'm hoping if the market does break out that I have a position, I have a potential to make some gain, but we're still at a risky time period. And back when we're looking at the financial stocks in June. And this is one way that I could also limit my risk. And so hence the name FOMO, or fear of missing out, on this opportunity that was in the financial world. So those are the two ones that I highlight. A lot of people, I love to see that the skip strike butterflies and the more advanced trades actually get a lot of listens, a lot of downloads and streams overall. But when it really comes down to it, the most popular trades are a couple that I mentioned. The episode 358, cash secured put in Ford, episode 371, FOMO trade in the financial ETF, the good old XLF. So with that said, I'll be back in the home office next week. And that's going to be it for this episode of Options Playbook Radio. So going into 2022, I would love to know, what would you like to hear more about? So please send an email to me on different topics that you might want to see in 2022. And thank you so much for all the support. It's amazing that we've gone through 300, and I guess this will be 396 episodes of Options Playbook Radio, and is growing in popularity year in and year out. And so if you have any comments on how we might be able to make the show better, please let me know. Email them to theoptionsguy@invest.ally.com. Also, follow me on Twitter. My handle is very simple. It's at my name, at Brian Overby. And thanks for listening. We'll be back at the same time, same place next week. Until then, may all the options you bought finish in the money, and all the ones you sold finish out.
The Options Playbook is brought to you by Ally Invest. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to ally.com/invest/disclosures to review additional risks involved with trading options. Securities offered through Ally Invest Securities LLC, member FINRA and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.